welcome to the closing beat, everybody. Happy Monday. How you doing out there? Hope you're having a great day. All is going good for you. This quick show that we do, we call it the Closing Beat. It's just a fun sort of update, show you how things are going for the day, talk about the markets, and they're waking up, so we've got more to talk about here as we go, and we'll cover that. We're also playing a game. It's called Guess the Dow. You just go to jazzwealth.com/guess the Dow. Tell me where you think the stock market will close next week. If you're the closest without going over, we'll send you a $100 gift card. If you're not one of our customers, like our winner last week, Mr. Pedro, and if you happen to be one of our customers, you can take the gift card, or we could credit your account $100. We'll leave it up to you, so take your shot there. No strings attached, no purchase necessary, none of that great garbage, and we don't sell your information or play any games like that. So anyways, let's get started here. Oh, by the way, our classes for the next 3 weeks, we're going to do the Backdoor Roth IRA Secure Act, and we're going to get back into nest egg, do some updates there, talk about some of the things that are going on overall with nest egg as far as updates. There's been a lot of updates in there. So we'll be sure to cover that as well. Well, it's the unofficial start to the new year, right? We've already started the new year, but this is technically the unofficial start when everybody is officially back to work. And you've got the Dow positive by 68 points. You got the S&P higher by 11 and 50 on the NASDAQ. We go over to the headlines of the day. Nobody seems to care about the Iran tensions. It started the markets lower, but we've got a bit of a rally. I've got a problem with the rally. We'll talk about that in a second. You got gold at new highs there, and we did give up back some of the gains there by the end of the day, but otherwise gold back to highs. The dip that we saw this morning, people decided to go in there and buy that, but they were very focused. They focused in on the on the FANG stocks. So we're going to kind of highlight that here for you just in a second. Bottom line is you can blow up a top Iranian commander and nobody seems to care as far as the stock market goes. Doesn't really matter. Now, big recovery off the lows. Now, you saw what you saw today, but I do want to show something here real quick. We'll go over to the S&P 500. You see a little bit of a gain on the day, but if we go overnight when the market's actually open, from the low overnight, 3, 4 o'clock in the morning Eastern time, to the high of the day today, that's 37 points. That's a significant rally off of lows. So what you saw during the day, well, that was okay. But to see us come off the lows in such an aggressive way, lots of volume, lots of buying pressure in there. If you go over to the Dow, it's even more impressive just from a number standpoint. You got 320-point rally from the lows overnight to the highs today, basically almost to the close. Really impressive there for investors that decided that was a big enough dip for them to go in and buy. Here's the daily chart of the Dow. You can see we've come back to the 20-period moving average, just kind of hovering at or very, very near highs. It's the same for the S&P 500. We go over there, we're basically still at all-time highs, very, very close, really. And I drew this line down here to kind of highlight now if we were to pull back from here, it'd be less than a 10% gain. But to give you an idea of how far we could fall and still not even see a 10% gain drop in the stock market there, pretty impressive there. Like I said, I've got a little bit of a problem with the rally today because it was basically all FANG stocks. That was basically the name of the game today. If you weren't in the FANG stocks, you didn't really notice anything. And we're going to play a little bit of a game. Before we play that game, I'm going to share a study with you in a little bit. There's actually a phrase, kind of you know how it is like sell in May and go away, Santa Claus rally, things like that. Well, there's one for January, and it's actually called As January Goes, So Goes the Year. And so we're going to share a study on that one. I'll probably highlight that or expand on it in our Notes from Jazz email that we send out to you. But let's play a little bit of a game here. I'm going to put up a chart. You tell me which one does not look like the others. This is a one-day performance of the different sectors of the stock market. So I just basically plotted them all out, showed for the day how things were going. You tell me which one doesn't look like the others. Grab a kid. Come on, you little kid that wants to learn how to invest. Go ahead and grab them. Come on over, hang out. Let's see if they can guess which one doesn't look like the others. Are you ready? Here you go. On the screen here, this started this morning, 9:30 this morning. This is all the different sectors in the markets for the moment. Almost all of them. I don't have energy in there, but I'll show you in a second. So we've got all the different sectors just plotted on a little chart. Looks like a heartbeat monitor thing. It's very sloppy. It's normally not a really good chart to show you guys because it's just a big sloppy mess in there. But one stands out over the others. I hope you noticed it there. That one does not look like the others. That's your communication services today, which is Facebook, Netflix, and Alphabet. Those are three names of the FANG stocks there. It makes up 50% of this sector. The bottom line is, what you see today, that purple line, is the reason the markets were higher. If you do not own any of those stocks, you probably noticed very little change in your investments today, unless you had some of the news-driven stocks, but they weren't real big ones today. Anyways, That's the bulk of the rally today. If it weren't for those three, I'm going to say FANG stocks plus Salesforce. If it weren't for those 6 stocks, there probably wouldn't be much of a rally today, and that'll lead us into our sector breakdown here. So if we go over to the individual sectors, you've got semiconductors, weak on the day, down 1%, relative weakness there. You got financials. We need those to move the markets higher. They were flat. We'll call it down just a touch there, but basically down on the day. You can look at regional banks. They were also lower on the day, pulling back. You've got a lot of areas of the market that were maybe flat or a little bit lower on the day, but just didn't really perform. Where was all the action? Communication services, which, like I said, between Netflix, Alphabet, and Facebook make up over about 50% of the communication services sector there. So really big rally in big tech. That's it. Everybody's just chasing those areas. You go over to Facebook, look at that, hitting new highs there. Amazon got a positive note out of Barron's we'll cover in a minute, but up 1.5% on the day. Alphabet higher on the day, hitting new highs, looking real good there. Netflix, there we go, looking good, very strong day, 3% on the day. Apple actually started the day lower, finished the day positive. We've seen that before, right? I mean, come on, you know how that goes. And it's just impressive, right? So that these stocks, just this handful of stocks are performing, causing this entire rally. So it makes you a little bit concerned. You like to see the stock markets rally as a whole, everything working together, meaning investors feel like they want a piece of everything, not just a little tiny sliver of the overall market. Granted, I mean, it's weighted and everything. But there you go. So that's that one there. You've got gold moving to highs today. Did come off the lows a little bit as the market started to rally there towards the end of the day. People just kind of thinking maybe this Iranian thing's not going to be that big of a deal. It's probably going to be a bigger deal than everybody's thinking. I'm a little hesitant to say that the market's just going to shrug all of this off and head to new highs. But nonetheless, you had some of the gold you had gold higher on the day, but a little bit of profit taking in there. And think about it. If you owned gold anywhere through the month of November and December and you just got that pop, it's guaranteed that you're profitable. Actually, if you owned it anywhere prior to August, after August, you are guaranteed to be profitable on that position. It would be normal for you to take a little bit of profits in there. So gold, a little bit higher on the day. Silver did well also. So silver higher by about 0.6%. If we go over to oil, oil actually gapped higher on the day, started because of the overnight trade. It started higher, started to pull back a little bit. We know it's a little extended in the short term. It's moved outside of its range here. Be totally normal for this to move sideways or to begin to pull back just a little bit. And like I said, that communication services, that's really the focus. We could just make this whole class based on communication services today and the 3 names that really led the way in that individual sector. So there's your sector breakdown. There's really not much else to cover in the space. Transports were lower, 0.6% on the day. You got basic materials down about 0.5%, continuing to pull back there. So there's a lot of weakness in the underlying markets in general. Utilities basically flat on the day, industrials flat on the day, consumer staples flat on the day, a little tiny little pop there. So you get the idea. Let's move on over to some individual stocks. Salesforce.com, we happen to own it here in our portfolio, so we're happy with that. Up 4.5% on the day. What was it? RBS. RBS has a price target of 215. That's about 30% higher than 173-ish. So RBS upgrading the stock, they put it on what's called their top pick list, which is a way of, I like that, right? When an analyst says we're bullish, and that's one of our best picks there. So RBS put it on there. They said that their guidance for 2020 is conservative, and they think they're going to beat their guidance, which they, if they're correct, then would assume higher prices there. So Salesforce higher on the day. Smile Direct Club is the symbol we're looking for. Coming up off the lows, they are higher by 21%. They're going to start off, they're the guys that make the thing you put in your mouth that fixes your teeth, right? So you just send it in and you put it in your mouth, and it's like braces, but you just put them in there and you're good to go. And they keep sending you more and more, so your teeth slowly get fixed there. I could probably use it in there a little bit. Anyways, they're going to start offering oral care products, but they got an exclusive deal with Walmart. And so that's seen as good news, obviously. Good volume today. The stock higher by 21%, which is good because since the IPO, it hasn't really done all that well. Bed Bath & Beyond, I always get these confused. Up 3% on the day. The news was they're selling part of their real estate or some pieces of their real estate to Oak Street Capital, I think was the company. It's going to raise about $250 million for Bed Bath & Beyond. What they're doing is they're selling it to them and then they're going to lease it back. So it's a very popular transaction. If you've ever been a part of that, owned a building or something, sold it to somebody, leased it back. There's some advantages there, some tax advantages. They've decided to do that at scale, and it's $250 million they're looking to put in their pockets. Sticking with retail, we'll go over to Pier 1, down 17% on the day. Pier 1 is in bad shape. They're going to start closing more stores, focusing on laying off some people at their headquarters. They're working on reducing their debt. They're even considering bankruptcy. However, they're going to announce this January 8th, which is 2 days from now. Stock price just reacting in response to that. They just haven't done well. And they won't lower prices at their store. I go to their store. There's still high-priced stuff. They won't, like, discount stuff. I don't know. Yum Brands, basically flat on the day. They're going to buy Habit. So if you're familiar with Habit restaurants, we don't have really any of them around here. They did expand into Florida, but none around our area. Habit restaurants higher by $32 because they're looking to pay $14 a share, which is still a deal for Yum Brands, in my opinion. Yum Brands doesn't really have this burger exposure. They're in pizza, they're at Taco Bell, right? But they don't really have the burger exposure, so by them buying that, that's what they're hoping for there. Plus their Pizza Hut division on Yum Brands, they own Pizza Hut. Really weak. A lot of competition there, so really weak. That's the news with Habit and also Yum Brands on the day. You got Gap, the retailer. Gap also owns Banana Republic and Old Navy, working on maybe a spin-off there, spinning off Old Navy. We'll see. Supposedly it's going to happen. It's trading back at the higher end of the range here, so you can go back up to the highs here. JP Morgan was put out a note that was quite positive about their same-store sales. So for the fourth quarter, they think same-store sales are actually going to be a little bit higher. Good news for the stock, and it's just going to even further drive the conversation back towards that spin-off, which they're supposed to be taking care of this year, really. I think it's supposed to be this year. All right. What else do you got? Amazon. Barron's said over the weekend that free cash flow is increasing quickly. They like the stock here. They think it's higher. Cal Mines, those guys that they make, if you buy eggs, they basically buy it from them. They own almost every brand that's out there. They're the largest egg producer in all of the U.S. Unfortunately, their earnings aren't that good. There's a lot of eggs out there. So got a lot of issues there. Too many eggs out there. They're not selling enough of them. They're going to close down some of the factories that are less efficient, try to shorten the supply of eggs overall. They missed on revenue now. This will be their 7th quarter in a row that they've missed on revenue. So the stock price significantly lower today. Calm is the symbol, C-A-L-M. Nothing but not calm today. Stock was lower by 8% on the day. Barron's had an article on Lyft. If you read Barron's over the weekend, they put out a lot of stuff. Lyft was a little bit lower. They said they're going to benefit from higher prices. Lyft is raising their prices just a little bit. And there was an analyst that came out today and was talking about Molson Coors. I didn't confirm this. I didn't look at this just to see, but their 8K, which is just like a general filing that you do give to update investors on changes at the company, management, things like that. You can look up TAP, like 8K filing, and you'll be able to see their most recent one there. But they, who was it? Evercore went through their 8K, latest 8K filing and said, you know what, the language in there seems like they're working on some kind of sale, like they may be interested in selling themselves or putting themselves out there as a potential to be for sale. I don't know, but the stock was higher on the day by 2.5% there. So that's what you have. You got 71.5% of the stocks above the 50-day moving average. That number's going down. It keeps down ticking since last week. It's just been slowly ticking lower, even though the markets are trying to fight off everything that's going on. The number of stocks over the 50 days just dwindling down. Again, because if you look at the major indices, you think, yay, everything's higher. Not true. It's really just a handful of stocks in there. It's not everything as a whole, at least for the moment. That could change, but at least for the moment, that's the way it is. You had 18 new 52-week highs today. I'm sure by now you can guess who made up those 52-week highs. Google, a lot of tech names. Almost 50% of the list today was tech names. Google, Facebook, Salesforce.com, we mentioned already. All of these stocks hitting new 52-week highs. The defensive names did start at 52-week highs, Iran news, but they did close lower. Raytheon ended up closing lower on the day, and Lockheed Martin also finished the day just a touch lower there, but they did technically make the radar for the day. You only had one new 52-week low on the day, and that was Franklin Resources. We've mentioned this one a few times. Last couple days, it's been on the list. Continues to make new lows, although people came in and gave it a shot today. Wanted to try to maybe pick off the bottom there. So Franklin Resources maybe catching a little bit of a bid here in the short term. We'll see. We will see. All right, I gotta share something with you here. You interested? Oh, before I do that, Raytheon paying out 94 cents in dividends, Gap paying out 24 cents, Campbell Soup's 35 cents, and Comcast 21 cents. We do own a handful of those, so dividends on the way if you happen to be with us here at Jazz Wealth. Okay, there is a phrase out there And I mentioned it earlier. It's called As January Goes, So Goes the Rest of the Year. And I will include this in the Notes from Jazz email that goes out on the weekends to our customers, maybe expand on it a little bit. But I want to share this with you here today. Remember when somebody tells you something as far as market performance, market expectations, you go, why? Ask questions. Why? How much, right? What if it doesn't work? What's going to happen? And so I always hear that every year, as you go through the year, there's a handful of different phrases. The sell and may and go away I mentioned. But as January goes, so goes the rest of the year. And that's a phrase. And all that basically means is whatever the performance is for January, typically that is what the markets do. Not percentage-wise, but if we're positive in January, the markets tend to be positive for the year. If we're negative in January, markets tend to be negative for the rest of the year. So we thought, is that true, right? Let's see how accurate that is. Let's go back and do a little bit of work here. Bear with me. It's going to look like a little bit of a mess. Just hang in there. I'll walk through it. Here you go. Here is the S&P 500 from 1950 to 2019. January versus the full year return. So basically what you're seeing on the screen here is, for example, we just pick a random year. 1967, January, the performance was 7.82%. If you look at the rest of the year, which is in red, the rest of the year was positive, and it was 20.09%. So as January went, so did the rest of the year, right? We'll go over here to, let's just pick over here somewhere to the right. 2006, January, 2.5% gain, and the rest of the year, 13.62. So January was positive, the rest of the year was positive. So you could say in 2006, as January went, so did the rest of the year, meaning it was positive. What we'd be looking for is any difference in performance, like over here. I know it's a bit of a mess at the moment, but in 1956, the January was down 3.65%. If you look at the rest of the year, it was up 2.62%. So as January went, the rest of the year did not go. It was down, and it finished positive for the day or for the year. So that's the messy chart that I just show you the data that we pulled on this one here. Down at the bottom is the real interesting stuff. The number of times that the study was actually true since 1950 was 51 times out of 69 years. That equates to 73.9% of the time. As January goes, so goes the rest of the year, meaning if January is positive, so is the rest of the year. So that's pretty impressive. Right? That's a pretty good stat. You would say that that's something you could probably rely on. It's pretty interesting there. Now, down here at the bottom, the percentage of the time that the returns were greater than January. What I mean here is a little bit the wording's not perfect, but what we mean here is if January was up 2% and the rest of the year was positive, how many times was it more positive than January? So if January gained 2%, that means that the rest of the year had to gain at least 2.01% to say, okay, January was good, but the rest of the year was even better. 87.5% of the time, if January is positive, the rest of the year is positive by more than January, January included, of course, but the performance is better than what January put out there. The average January performance is 1.11%. So if you're curious, since 1950, the stock market in January returns 1.11%. It is positive almost 61% of the time, which is just below that. We then took the opposite side of things and said, okay, if January was a negative month, how many times was the rest of the year more negative than January, right? Because there's some years where maybe you saw it a minute ago. We were over here and we said, okay, January 1956 was down 3.65%, but the rest of the year finished positive 2.62, all of the months included. So how many times were we negative and finished more negative? It was only 36% of the time. Very rare that it actually happens. So even if January is a negative month, that doesn't necessarily mean that the rest of the year will be more negative than January. I hope that helps and that wasn't too crazy there. Had a little extra time today. Did a little extra studying. I told you, I'm learning a program. I'm trying some different things here, so stick with me on that. If you didn't quite understand, I will highlight this again in the in the Notes from Jazz email that goes out every weekend for our customers, along with some other great geeky stuff there as well. Okay, I think I've covered everything. Tomorrow we'll talk about, if you don't know, the Consumer Electronics Show starts up tomorrow. It's a 4-day event, and it has an impact on the market, actually. It has a decent impact. So we started running some studies on that. I'll share that with you tomorrow. But if you ever get a chance to go to that, it is some super geeky stuff from the tech space. So that's what's going on there. I will attempt to answer your questions now if I can and see what we can do. We'll go from there. Still waiting on Amazon to get up and going? Yeah, I gotcha. I hope that phrase works for the weather because January has been warmer there. That's cool. Yeah, so hopefully January has been warmer and then maybe the rest of the year will be warmer for you. I think there's a certain part of the population that believes that that's increasingly true every year. Yep. So this year we have a massive pump and then a blow off top. We'll see. We'll see. Yeah. What do you think of Tesla stock? It's done well, right? A lot of folks, and that's interesting that they've kept themselves in the headline, even given considering everything that's going on. China factory doing well, things coming out of there, and they hit their numbers. It was the bottom end of their yearly vehicle delivery numbers. I shared that on Friday, shared the graph of how many vehicles they delivered and everything, but still looking good. Yep. I would call that relative strength today too. Up 2% on the day. Stock market, in my opinion, was flat. Right? Take out just a few stocks, the stock market was flat today. So I think you can call that relative strength. I think technical traders would look at that as well. What's the saying about war? Yeah, I don't have one for war at the moment. You have CrowdStrike. Yeah, CrowdStrike did well today. The assumption there is that, hey, Iran strikes back in a tech way, like a cyber attack sort of thing. So CrowdStrike, 9%, basically all on that news. There was really no other news for CrowdStrike today. That was based on Iran there. Oh, did Kramer mention them? Maybe that helped then too. Yep. Cool. Well, hope it continues. I mean, coming off lows like that, that's a tough one because think about what everybody's thinking in this stock. Imagine the emotion in this stock. If you look back, you only have a handful of people that can say they have a profit at this point. The majority of people are sitting with a loss, assuming they're holding those shares. So on the way up, you never expect these to rocket ship straight up because you're going to have people along the way that say, whew, I had a big loss, now I can break even, sell. Right? Or I had a big loss, now I have less of a loss, sell. And because of that, you tend to see a real choppy pattern on the way up there for stocks like that have really suffered. Same with the, what was the one we mentioned a minute ago? Smile Direct. Same with things like that. Yep. How much would I have to invest so I can match the market or at least not be behind because of fees? How much would you have to invest to not be behind because of fees? I don't think it's a dollar amount. I think it's the investments, right? So the investments themselves, could you tweak them and make them a little bit more aggressive? Absolutely. Other than that, yeah, I'm not sure. You like the January info stuff? I love it. I love it. I love it. Cool. What do you think of Mercado Libre? Yeah, so they've been... why is my thing frozen? There we go. Mercado Libre, so it's been pretty much flat. Here we go. So I'll point that out here. There we go. Kind of flat going into here. Just finally waking up, that big reversal day. That's probably, if you have anything to hang your hat on in terms of a bullish move, it's that other day, January 2nd, right? So we go like this, right in here. So this move right in here, that's all you can really hang your hat on because anytime a stock sells off so aggressively and very quickly reverses like that, you expect follow through. Or the people that are in the stock are going to say, okay, I can sit back for a minute. I expect to see follow through there. Yeah, that's what I would think in terms of that one there. Yep. I love it. Let me go back over here. You're feeling all the stockbrokers offering zero. Oh, you're testing them out. Sure. At the end of the day, when it comes to that, if you're an active trader, you're buying and selling daily basis or whatever, you got to go with the platform that gives you what you need. There's so many different layouts and things like that. You may look at like TradeStation, for lack of one. I don't like work with them or anything, but TradeStation, you might think, okay, that's a little complicated compared to Fidelity or something. I don't know. You got to feel those things out. There used to be a ton of them, and so it was just a lot of sloshing around back and forth. Back in the day when you were an active trader, you had so many choices. Over the years, they've kind of been gobbled up little by little by a lot of the big guys there. So understandable. Yeah, play around with them. See what you like. And you figure that out by doing more and more. So you might figure out, you know what, I'm more of a trader in the tech space, or I'm more of an options trader, a futures trader or something. And each platform will have little things that may stick out to you as better. At the end of the day, if it's basically the same cost, or honestly, even if you have to pay, I would pay for a good platform that has what I want versus try to get free something that's making it harder for me to do work. Just my opinion. You don't have to do that, but my opinion. What are your thoughts on oil? I mean, other than being overextended here in the short term, you can't forget OPEC's cutting production, right? So as they cut production, that's tightening up the oil supply. People are already making bets on that, of course, but you can't let these sort of recent headlines get in the way of that, I think. Yep. Did Rite Aid go back down? It had an amazing run. Yeah, you don't like to see that. So a really, really sharp run there for Rite Aid on earnings and everything. Very quickly coming back, very mean reversion there. Obviously, very, very quick pullback. Same thing, right? That's the kind of same concept there, where you have people that have been in this stock and just sitting back, like it's taking losses. All of a sudden, they get this blast off, and they want to sell into it. Volume spikes and everything. People are just wanting to sell into that mess there. People want to take profits. And the more it starts to pull back, the more these people in here go, oh boy, I'm not going to get that profit I was looking for. I guess I'll sell and take a smaller profit or whatever it happens to be. If it's a loss, then it's the same thing. So think of the psychology of that as well when you dig through some of those things. Yep. What are the odds of REITs pushing back to new highs? You would think they have every advantage, you would call it like a tailwind, every tailwind to push them there. Lower rates, new home sales, multifamily apartments are doing really well as far as building and transactions. So you would think that would do well. For the moment, it's still just kind of floating around there. I give you that. Yeah, it's trying. It's been more volatile than usual. I know we've kind of pointed that out a few times. Yep. Cool. Current undervalued sector or subsector, is it airlines? Meaning, is the airline sector undervalued? A little bit at the moment, which is like a category, or like you said, subsector. Cheapest is still energy, and most expensive is still tech. Yep. Is there any reaction to the drone strike versus the shooting down of a drone? I don't know. Meaning, is there any difference there? Or would one be worse than the other? I found it interesting, the reaction to them, Iran actually striking the Saudi Arabian oil field versus us killing somebody. I thought that was interesting, but I wouldn't know. AMD made a good comeback and climbing after hours. What's your feeling on the tech sector there? Look, semiconductors is a little bit weak. AMD has held up through that. AMD is still very much overbought in the short term. It's had a good run. Right, so you gotta expect that there's people in there saying, all right, at some point, if I get the sign of weakness, I'm gonna take my profits. Anybody that bought in here, anybody that bought in here, anybody that bought in here, if they're any of those short-term traders or people that are looking to buy dips, they're gonna say, okay, if it pulls back a little, I will sell some of my position and I'll come back later if it dips. So I think if AMD pulled back, nobody would mind, right? Except if you held and bought at the top or something. But other than that, nobody really would mind, in my opinion. Oil, a good buy now because of the war. So not at this moment, personally. I wouldn't just jump into that. I would expect you to see more volatility, but same thing. It's a little bit extended here. I would want to see it pull back a little bit. This is the actual price of crude oil here, so it's maybe not what you're looking at, but I just kind of think, why buy something that's extended if you don't have to buy anything, right? If you have to buy something, then you're searching around trying to find some oil stocks, but maybe you let it pull back just a little bit. I can't, that's where I'm at on that one. You think Apple's a bubble? Apple's done really well. Yeah, I give you, that's a pretty consistent uptrend there. I don't know that it's a bubble, but same thing. You kind of expect from these big tech stocks, you got to expect some kind of profit taking. What's the reason they're going to take profits? If we don't have anything between now and the next couple of weeks, because earnings season starts up, I don't know. I mean, people are just all over this one, consistently buying more and more. Remember, earnings season starts, so a lot of these stocks are going to start to get pretty active, I would think. You're taking some Apple position. You're going to buy it. All right. Diving in. You're welcome. Invade. It will take months to get in. Oh, yeah. I mean, that's the problem with social media. I mean, it's just so much out there. It's tough. I mean, if you want the markets to pull back, you're cheering on what you see in social media about World War III and the draft and everything. But really, I mean, we'd have to do something so severe there that Russia got involved, and maybe that's what everybody's thinking. I don't know. But that's a tough one at this point, right? It's like the trade war thing. I know they're two separate things, but the trade war thing was like, oh my God, we hate China. They're horrible people. They're ripping us off. And they painted that picture. Next thing you know, we're shaking hands. Well, that's weird, right? We're shaking hands. That's kind of interesting. Same with our North Korea. Remember, North Korea started mouthing off again, and Trump said, hey, if you could just wait till after our holiday. We're celebrating Christmas and the New Year here. And they went quiet. Now all of a sudden he's starting to talk again. So it's just kind of, it's a weird thing. That's why I like to follow the dough. I just follow the money. I love it. Can you tell the buddy at UTX? Yeah, he still does it. That's his thing. Yeah, he's still out there every single day. He is the equivalent of 1/3 the volume, if not more by now, because it's been some years. But yeah, you want him to take a break. But he plays both sides. So he doesn't actually buy the stock and bet on a direction. He plays both sides every single day. So it wouldn't matter to him, really. To be honest, he would do worse if the stock had a big move. The idea is that the stock would have a sort of a narrow range. That's when he would do the best there with that strategy that he uses. But I'll put out the good word. I love it. What else did I have for you here? Oh, hey, if you're still around, you know how all the analysts do their, this is what we expect in 2020, commodities and everything, this is what we expect, all the different asset classes, predictions and all that great stuff. Bloomberg put out a really cool composition of all of that. I'll paste it if I can. I've never done this before. Let me see, can I paste it here? If you want, check out that link. If it shows up for you, that is every analyst prediction on everything they've predicted for 2020. So if you want to just see how people think, what they feel about gold or the S&P or whatever, that should do the trick for you. Give you something to read tonight while you're hanging out. There you go. I give you homework. All right. Other than that, I think I'll wrap it up from here. I appreciate you watching. Thanks for coming by here. Hope some of this stuff is helpful to you. We try to do as much detailed stuff as we can. Because, just try to be different out there. Share things with you that maybe people are about to start talking about, like the January thing or consumer electronics and things, and try to just cover different things. So hopefully you find it helpful, and you enjoy the rest of your day. Talk to you soon.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.